Okay, so in this lesson, we're going to be looking at depreciation and how depreciation works, right? We have our difference there. We have straight line method of calculating depreciation and diminishing. So whether you're in grade 10 or 11 or 12, you need to understand depreciation as it is part of your note 3, which we know that it is your fixed asset note, right? So if you do not understand depreciation, how to calculate depreciation, and how to find your carrying value of your assets, then you would not be able to fill in the fixed asset note. And some tests, some exams, they will just give you the fixed asset note as it is for maybe 15 to 20 marks, depending on how big your test is, and you would have to fill it in. So if you don't know depreciation, say goodbye to majority of your marks, right? So going into this, you first have to understand what account depreciation is, right? If you're how can I put this? Depreciation is a negative asset, right? Meaning that it decreases your assets, which I'll go into in a second. If we know it's a negative asset, we know that normal assets increase on the debit side, decrease on the credit side. So a negative asset is the opposite of that, meaning that it'll decrease on the debit side and increase on the credit side, right? Let me remove that, right? So now you know the classification of the depreciation account. Let's understand what depreciation is to know how it works, right? So sorry there. Depreciation is you decreasing your asset, right? You're lowering the value of your asset. So if you have an asset here, for 1,000 rand, right? Depreciation is you saying that this asset, by the end of its life cycle, so life cycle is how long do you plan to use this asset. At the end of this life cycle, this asset will be worth 0 rand over 4 years. So now you know that you're going to say 1,000 rand divided by 4, and you have your annual depreciation of 250 rand. So 250 rand times 4 gives you 1,000, and then your end result is 0. Now, yes, it's still confusing. I have not explained depreciation by itself. So let's start on that. Let's say you have a phone, right? You have a phone. Let's use an older phone. Let's use an iPhone 6. iPhone 6. Those who use iPhones, you know the system, the software and whatnot, and it was running on iOS. This is the operating system, iOS 6, let's say, right? We now know that the latest iPhone, I'm not keeping up with these, iPhone 15 is, let's say, on iOS 15, right? Okay, now we have our basics. This phone of yours, this iPhone that you bought for 1,000 rand. But every year, iPhone releases a new phone, meaning that the more years to come, the less valuable your phone becomes. So if the value was 1,000 rand, the next year your value might be worth 800 rand. Because say you sell this phone to someone, that person would have an option to buy the latest iPhone with iOS 7 over yours that is iOS 6, right? that is a little look at depreciation. That the more you use your assets, the lower the value becomes, right? Now this one is external. The iOS thing is external. You can't control that. But what if it was something you could control? What if your screen breaks? Is it still worth 1,000 rand? Can you still sell it for 1,000? What if you dropped it and it chipped at the corner there? Can you still sell it for 1,000? So maybe let's say after your screen breaks, it's now worth 800 rand. If you sold it to your friend would say, I would give you 800 rand because you're my friend and you want to sell this phone, but I can't pay 1,000 because the screen is broken. I can go buy a new one worth 1,000. After the corner of the phone chipped there, it's now worth 500 rand. Right? Then the fingerprint sensor does not work anymore. Now the phone is worth 200 rand. Right? This is wear and tear. While you're using your phone, it is breaking, it is chipping, you're dropping it, it is getting outdated. All these things are happening to the phone, which are decreasing the value of the phone. Now, where does depreciation come in here? Depreciation is every step of the way that your phone loses value. That is depreciation. Right? It lost 200 rand value there. It lost 300 value there. And it lost another 300 rand value there. It got depreciated by 200 rand, by 300 rand, by 300 rand again. Right? At each point, your phone is losing value. The same way, if you have an asset, say a car, right? If you have a car there, what an amazing drawing. If you have a car there, when you use the car, the tires might wear out, right? Might get a puncture on the way. The color of the car might get messed up. The radio of the car might get broken or whatever the case is. This is depreciation. And you as an accountant, you know that you bought this car for 100,000. But as the years go, this car will lose its value. So as an accountant, you're saying that this car, I will have it for 5 years. We'll have this car for 5 years, and after 5 years, it is going to be worth 0 rand. Right? But we don't say 0, we say 1 rand, residual value. We say 1 rand, but that's something else, right? You're saying after 5 years, it's going to be worth 0. So we know that every year, it is going to lose a certain amount of its value. So in the first year, if this car, let's say we're doing it on the straight line method, if this car is 100,000 and the depreciation divided by 5 is going to be 20,000. The depreciation every year is going to be worth 20,000. So meaning that first year, 20,000 depreciation, the value is 80,000. Second year, 80,000. This is the carrying value. 80,000 minus 20,000. Now your vehicle is worth 60,000. Third year, it's worth 60,000. It got depreciated. Throughout the year, you used it. Maybe you were driving it and then you bumped someone, the bumper is broken, or the tail light is broken, or your lights don't work anymore, or whatever the case is. So another 20,000, 40,000. Do you see, the more and more we go through this, the less valuable the car is. And this we call carrying value. Carrying value. Meaning that carrying value is what the vehicle is worth at the moment after the depreciation, right? So carrying value is your cost minus depreciation, right? But we'll go through into that at another time. Right now, I just want you to understand the idea behind depreciation and why we have depreciation, right? Each year or each period that we have the asset, it loses value, right? But remember, this does not go for every asset. If we have land and buildings, does land and buildings lose value? No, it does not, right? If you have a house, you can even do your own research. Go to Property 24 or private property, or even ask your parents. If you bought a house for a million rand, maybe a year later, it is not worth 900,000 rand now. Chances are maybe it is now worth 1,100,000. Right? So property does not depreciate at all. The only depreciation that you have while conducting your note 3 will be your equipment. Let me remove this. Your depreciation that you'll have will be on equipment. Any time now. Equipment and vehicles, right? Vehicles, the example that I made. Equipment can be similar to a cell phone. Your computers in the office is equipment, and it loses value. A computer that was used 10 years ago, that was bought for 1,000 rand, you could probably get it now for 200 rand, right? It lost its value. So now, understanding what depreciation is, how do we calculate it? We have two ways of calculating depreciation, and please read your questions when you answer them, because you'll see now what the difference is. Straight line method is, as I said, every year it's depreciated by the same amount. So if you have an asset worth 100 rand and it's depreciated, say this is the cost, and it's depreciated at 20%, this is the depreciation percentage. That means it's going to be 100 rand minus 20 rand every year, right? So year 1, you'll have 100 rand minus 20, you have 80, right? Then year 2, you'll have 100 rand. No, sorry. You'll have all right, let me not calculate it this way. Year 1, you're going to say 100 rand multiplied by 20% equals to 20. Year 2, you have 100 rand multiplied by 20% equals to 20. Year 3, you still have 100 rand multiplied by 20% equals to 20. You see how it's going. Now, this is your depreciation for each year. And when you add your depreciation every year together, you get your accumulated depreciation of 60 rand. Your accumulated depreciation is year 1 depreciation plus year 2 plus year 3 and so on and so forth. That is your accumulated depreciation, right? So this is straight line. Straight line, it's simply cost multiplied by your depreciation percentage. But now, if we're using diminishing method with the same example, 100 rand cost, but 20% depreciation, right? On diminishing method. Here is the difference. Year 1 will be 100 rand multiplied by 20% equals to 20. It changes here. Year 2 will be 100 rand minus 20 multiplied by 20% equals to, it's going to be 80 there, multiplied by 20 will be 16. Right? This changes because diminishing method, it is cost minus the previous year's depreciation in brackets multiplied by your depreciation percentage. Right? Year 3 will be then, remember, cost minus your accumulated depreciation. Remember we said accumulated depreciation is you adding all the years together. So here we have year 1 and year 2. So we're going to say minus 20 plus 16 will give us 36. So it's going to be 100 minus 36 times 20%. So that will give us 64 multiplied by 26, 6.4, 12.8, 12 rand 80 cents. What is the accumulated depreciation at the end of year 3? 20 plus 16 is 36, plus 12.80 is 48.80. Now, I want you to look at the difference between this. Straight line, your depreciation was 60. Diminishing method, your accumulated depreciation was 60 for straight line. Your accumulated depreciation on diminishing method is 48 rand 80 cent. So hence I said that it's very important for you to know that are you using the straight line method or are you using the diminishing method, because your answer will be totally different. And that comes to you understanding that straight line method is calculated on cost multiplied by depreciation percentage, and diminishing method is calculated on cost minus accumulated depreciation multiplied by the depreciation percentage. Now, if you do not understand this explanation of depreciation, please watch it again, maybe twice more, until you understand this basic. Because in the next video, I'm going to look at the example of straight line method, specifically that, and then I'll make an example of diminishing method on another video, so you can understand the difference before we move on to calculating your carrying value and asset disposal and all that good stuff. You should first understand this.